Welcome to Capital Gains, Yahoo Finance's unique look at how U.S. government policy could impact your bottom line. I'm your host, Madison Mills. $4.5 trillion. That is how much President Trump's proposed tax cuts would cost, and that's in part what's driving Elon Musk's cost-cutting efforts over at the Department of Government Efficiency. The House approved President Trump's government spending bill, which includes those tax cuts, but that legislation still got a ways to go. So we'll get into all of that, what that means for you and your bottom line. But first, I want to welcome in my co-hosts, Rick and Ben. Hey, guys.
Hey.
Sure.
Ben, let's go to you first. What's on your note cards this week?
For sure, yeah. So my note cards, there's two certainties on this podcast. There's DOGE and taxes. So I'll start with DOGE, and then we can do a little taxes, do a little bit on for both of you.
I got the joke. Death and taxes.
Okay, good. I hope I was clear enough. On DOGE, real quickly, I think there's some clarity. I think for the markets, it's important to point out about what DOGE is and what it isn't. What it is what we've seen is a sort of Elon Musk's move through the federal government, agency by agency, and causing kind of massive disruption along the way. But what it isn't is perhaps what's, at least so far, is what's perhaps most important for markets is a sort of real lever on the federal debt, the $36 trillion debt, or the $2 trillion annual deficits. There's a really telling graph of the Treasury spending day by day. And if you look at 2024, it's like this, and 2025 so far is all but identical. You can see the DOGE effect when you get down to things like USAID and State Department, but the overall top lines are the same. So Musk still has a long ways to go before he gets to his $1 or even $2 trillion in cuts that he's aiming for, and he reiterated this week. On taxes, and this is where I can feel the excitement. This is the House Concurrent Resolution 14 establishing the congressional budget for the United States government for fiscal year 2025. That is the budget resolution that passed this week that I would argue, I think we're going to talk mostly about that this week. And that's where the kind of real money is. I mean, Madison, you said at the top, $4.5 trillion for tax cuts. There's $1.5 trillion in there for spending cuts as well to sort of balance off at least part of that. But that's where the big line numbers are coming from and what could sort of change the budget most dramatically over the coming decades. So there's a lot in there. Our guest is going to be great on that. But that's the area where we're talking in the trillions as opposed to cutting USAID, which the scale is much smaller, at least so far from us.
I know our millions of viewers are going to be hitting pause on that cue card so they can read the whole thing. Look, everybody out there needs to know that Ben Werschel is the DOGE king. He looks at this website about 50 times a day, and every time there's a new record, Ben adds it to his database, and he makes new graphics and stuff. So if you want to know what's going on with DOGE, you got to be following Ben by the minute. But you made the right point, Ben, which is the real action is really with the tax cut bill, and you could almost argue that DOGE is a bit of a sideshow. To put this in perspective, I think the stakes with the tax cut bill are huge, literally in the trillions of dollars, and the stakes with the Government Efficiency Commission, even though it's getting minute by minute headlines, the stakes there are actually pretty small. When you look at like Wall Street firms trying to analyze what's going to affect markets, I mean they're looking at DOGE and they're saying things like even if Musk shut down. Fired every federal employee, that would not move the needle very much on federal spending and federal debt. But what is happening with this tax cut bill is going to be a big deal. We're going to be talking about this for the rest of the year, but we're finally getting us an idea for the scope of cuts that congressional Republicans are considering. And as we've discussed before, that looks like there are going to be some sizable cuts to Medicaid. That's really going to be important because it's going to test how much cutting our voters going to tolerate. We're going to be talking about that a lot later, but we're getting previews now.
Yeah, and I'll just add to that of course the market is incredibly obsessed with the idea of corporate tax cuts, particularly because year to date we've seen a lack of strong conviction in the market and earnings estimates are moving sideways. So forgive me if I'm getting a little bit too wordy there, but it's basically this idea that earnings from companies, we've gotten used to them just growing so exponentially, and now we're just getting your average run-of-the-mill beats when it comes to earnings. And we saw this in NVIDIA that had an incredible, amazing quarter quarter yet again, but the earnings estimates were just so sky high that the company wasn't necessarily able to wow Wall Street. What's interesting though is after Nvidia earnings, we did see a move to the upside in the stock, and then it started to reverse this morning and take the rest of the big tech names with it. And the only headline that I was able to tie that back to and confirmed with a source of mine is this announcement from President Trump that China is going to charge an additional 10% tariff starting March 4th. And then he reiterated those Mexico and Canada tariffs as well. So it's interesting that those two headlines are potentially what's weighing on Nvidia stock, given what we know about the market largely ignoring some of these tariff headlines. But perhaps this morning, that's not necessarily the case when it comes to Nvidia and a little bit of the risks coming.
Well, Maddie, let me just at a simpler level. I mean, the overall stock market has not gone up, I believe, since Trump took office. I mean, there was a nice rise after the election, but the S&P 500 has basically flatlined. I think it's actually down a little bit since Trump took office. I mean, what seems to be going on is Trump is giving markets all the bad news first, which is tariffs, deporting migrant workers, and whatever DOGE is up to. We're getting all the bad stuff now, and what markets want, what's going to be the upward trajectory stuff is tax cuts and deregulation, but that's coming later. Goldman Sachs put out a note this week saying, we still think markets are underpricing the tariff risks, which means that they're kind of blowing them off. They're kind of saying, yeah, we know Trump is threatening these tariffs. We don't think he's actually going to do it. He is doing it. It's happening slowly, but it is happening, as we saw with China. He started with 10%. Yep. Now we have another 10%. I mean, how high is he going to go?
Yep. Well, we're going to bring in former chairman of the House Ways and Means Committee here. We've got Kevin Brady. And Ben, I know you've got a great question for Kevin.
Sure. Yeah. Great to be. Thanks, Chairman. Thanks for being with us. I'm curious. Curious your take on what happened this week on Capitol Hill. It was a big win for your former House Republican colleagues in sort of getting the budget resolution, the kind of outline of a possible deal through. I'm curious kind of your top lines of how that changes the calculus for what we're going to see in the final bill. Does it make it bigger? And are there any specific provisions that you think, as we're sitting here today, are more likely to be implemented than weren't at the start of the week?
Yeah, so you're right. It was a huge win. I think it caught Washington by surprise. And I think conventional wisdom was that with that near zero majority, it's going to be extremely hard to get those votes together to take this next big step, which is to move this reconciliation bill out of the House and begin sort of the serious negotiations with the Senate and the White House. Clearly, they delivered in a big way, and I think you can credit to the tax writer, Speaker Johnson, Leader Scalise, the whole team making that happen. So what's the next step? They've already begun it, serious conversations with the Senate, because both chambers have sort of taken different approaches to how they're going to move tax reform across the line. This year, they're using different baselines that change some of the numbers. Nonetheless, I know from my own work in reconciliation, those negotiations, you got to be on the same page, and with the White House as well. And so I think the timeline is that they'll be working through March to try to reach that consensus. My guess is they will wait for those 2 open seats in Florida to be filled to early in April to be able to move that final bill. And then they start the real work on tax cuts and how those reforms look and how those spending cuts are. This bill really was more about top line numbers, sort of in where each committee will be instructed to add or subtract. And so we still got a long way to go, but there's no question the momentum from this bill is very crucial. I think we'll look back at this as a pretty important week.
Chairman Brady, I wonder if you could handicap some of the likely outcomes here. For one example is, I mean, I'm seeing some analyses saying we think the likelihood of some tax cut extension is 100% by the end of the year. But the question is, how long will they go into effect? Will some of those other things that Trump said he wanted to cut taxes, will those be included? And it's obviously unclear what the spending cuts will be as offsets. So what do you think investors can count on happening, and what's the part that's up in the air?
So I think investors should look at this step we saw as increasing the odds pretty significantly of a bill on tax reforms longer term or permanence by the end of the year. No guarantee of that. There's a lot of steps yet to be taken, but I think the chances for all these conversations stalling out and a short-term extension to buy themselves more time, I think that went down considerably. I think the key is going to be how they resolve over the next month, how reconciliation will look. Because if you noticed in the Senate or in the House bill, excuse me, they really created a band, a tie between spending reductions and how much can be spent to extend the tax cuts. It's sort of like two rock climbers tethered together. And in this case, the higher that the spending reductions can climb, the higher the tax base can climb. That's going to dictate really how much of the tax reform is made permanent, what might be shorter extensions. Into the other question you have, will they accommodate President Trump's campaign tax promises? The short answer is yes, as much as they can. And I can tell you from experience, leading Ways and Means during all the tax reform discussions, I didn't pay so much attention to the president's tweets each day. I paid attention to his campaign promises because that's what he was calling me about. And so, yes, there's going to be, I think, meaningful action on each of those issues, or at least most of those issues within this tax bill. You always start the conversation is how do we accommodate the priorities of the president?
All right, well, we've got to take a quick break, but we're going to be right back with Chairman Brady. Stick around. Welcome back to Capital Gains. We're here with former chairman of the House Ways and Means Committee, Kevin Brady, talking tax policy. And Chairman, it's important for our viewers to know that you were the architect of the Tax Cut and Jobs Act. And as you know, extending it would cost $4.5 trillion. So one of the goals of the Department of Government Efficiency is to cut spending in order to be able to pay for all of that. To what extent do you think DOGE is an effective tool for your legislative baby to be able to continue to survive?
Yes, so I'm not sure the two are related, and here's why. Really, the government efficiency is about right-sizing government. And COVID caused us to just explode the size of government by 30%, more than that, in just almost overnight. While we're collecting record revenues, our spending's far exceeding that. So it's not sustainable. Obvious question is, how can we right-size the government? Do we need to be at COVID era levels when we're not in that pandemic? The answer is no, we don't. And I think where the government efficiency, where Elon Musk's work is starting is simple question. Where are we spending our money now? And I think that using that data, the analytics, that's where he's figuring out, and I think revealing for both agencies in the federal government and in committees in Congress, how you can have savings, efficiency, accountability in that. So could DOGE savings be swept into the reconciliation bill? Maybe. I don't think it's contemplated at this point because they really have two different missions.
So, quick follow-up on that. When the DOGE Commission started, I mean, they're not just doing analytics. I mean, they are actually trying to rescind spending, cancel contracts, fire employees, and stuff like that. When this got rolling, I expected much more aggressive pushback from Congress, including Republicans in Congress, saying, "Hey, that's our job. We control spending. Your job is to execute the spending that we approve." Is that coming, or do you think Republicans in this Congress are fine with the way Elon Musk is inserting himself into the spending process?
Yeah, I think there's a lot more communication going on than is apparent, especially between our committees, we have authorizers who really lay out the policies and what the executive branch can do, the appropriators who give them the money to do it. And there's an awful lot of coordination, I think, between government efficiency, the agencies and departments themselves, especially now that we've got those secretaries in place going forward. So I think Congress sees this as sort of pulling the curtain back on what Congress has been trying to get from the executive branch for an awful lot of time. So yeah, I think it's actually generating conversations in Congress about how you right-size it the right way, keeping Congress's priorities in place, for looking for those programs that are either wasteful or really just no longer priorities for a government that is this big and growing bigger.
Chairman, one more question to you about paying for the taxes or perhaps not even paying for it. There's a conversation this week about current law baseline versus current policy baseline. The kicker there is that the latter means you could sort of count extending the tax cuts as zero because that's the current policy. You've talked about current policy in the past as a good idea. Are you supportive of it for counting this bill? And do you think there's actually will to get that done, even though it doesn't change the underlying debt that it would increase?
Yeah, so we've always operated on the current law baseline because that's been how the budget's been scored and taxes have been scored in the past. That's why we began our tax reform proposals a deficit neutral proposal, because that would create the permanence that we wanted in a new modern pro growth tax code. In this case, lawmakers are looking seriously at a current policy baseline. That's what they use for spending. The assumption is spending will continue forever. So as it grows, it doesn't add to the deficit, which is a curious way of Washington thinking. So they're asking, should they be counting tax cuts the same way they count spending? I think that's sort of at the heart of the policy discussion here. But here's the point I'd like to make. Either way, either policy they adopt, and I think current policy gives them a better chance at permanence. Either way, there's going to be a serious deficit reduction number. The House is going to insist upon it as moving the tax cuts that we as a government, we as a majority party, as Republicans, are looking at those pay fors that can offset it. If you recall, 2017, we offset $4 trillion of the new tax code reforms. This Congress is serious about moving big numbers as well. I think that's appropriate.
I want to end on something we heard from Representative AOC this week. This won't surprise you too much to hear that she talked about how this administration is throwing tax cut or spending cut policy at the wall to pay for these tax cuts, which will benefit the wealthy. What do you want constituents to know about how the Tax Cuts and Jobs Act impacts lower income people?
Yeah, it gets so frustrating having authored that claim. It only benefited the wealthy and big corporations. It's been fact checked so many times. The Washington Post finally called it a zombie claim because so much of the tax cuts, $3 out of $4 went to families, for example. A bunch went to Main Street small businesses as well, really focused proportionally on middle income, modest income workers and taxpayers for the most part. So that's frustrating. The other thing is, I think when you see what the committees produce for savings, for example, in the Medicaid area, they are not looking at cutting Medicaid. They're looking at slowing the growth of that program and rooting out the wasteful spending, the money that would go to those who are undocumented, actually requiring able-bodied people, oftentimes men, to work if you're receiving Medicaid. So they're looking at reforms that I think most Americans, if they look at it, are going to say, good. That's money that should be going to people who are eligible or shoring up the solvency of that program.
We're out of time. We could continue talking to you about this for ages, but we really appreciate you coming by the show. Chairman Brady, thank you so much.
No, thank you so much. You guys do a great job.
Thank you. We really appreciate it. Before we wrap up today, we do want to close on the latest coming out of Ukraine and Russia. And I know from my perspective, we're certainly seeing a reaction in the stock market, seeing European defense stocks in particular rallying. Rick, what can you tell us about the latest?
The Ukraine war remains extremely important. I mean, we still have a major war in Europe. There's no guarantee this cannot get worse and spread. Vladimir Putin certainly has ambitions beyond Ukraine. So there's this new deal Donald Trump is making with Ukraine and with their president, Volodymyr Zelensky, which is to give the United States a stake in the future mineral profits that Ukraine might be able to generate. This is from fossil fuels such as oil and gas, and also other types of minerals, titanium, for example. Conventional foreign policy people just think this is a terrible idea. I mean, why doesn't the United States just act like a grown-up, leader of the free world and just defend Ukraine because it's in the U.S. interest to do so, which I believe. However, this might not be the worst thing for Ukraine. I mean, it actually gives Trump specifically a stake in the future of Ukraine. Who knows whether there's any substance to this deal or not. But Ukraine has kind of jumped on it. So I think now we wait to see what is Trump going to do in exchange. Is he going to maybe this gives him cover to actually continue military aid to Ukraine? He had sort of threatened that he would cut it off. That would be devastating for Ukraine. So this is just really important to watch. And this is not a problem that's going away. As much as people may have lost interest in it, this remains really important. Ben, you've talked about the Russian angle here, and that's interesting as well.
For sure. Yeah. It speaks to a larger point you made this week, Rick, that Trump loves deals. I mean, the Ukraine, he likes nothing more than having a world leader come in and sign a deal, which is what we're seeing with Zelensky this week. But he's in the early stages, he says at least, and Putin as well says, of a similar deal on the Russia side of this. The underlying thing here, of course, is the minerals, those specifically rare earth minerals. Russia, actually, it's worth noting, is a real big holder of rare earth minerals. China's number one, Russia's fifth. Ukraine is actually much lower down. So it's clearly proven to be a way to get at Trump's interest in aligning with this war in terms of possibly ending it. He's signing this deal with Ukraine, but he's pushing for a deal with Russia that would sort of see economic development there as well, possibly down the road. It's really significant, I agree.
So really important takeaway here is there's no reason to think that Putin is going to back out of this war, giving up anything. I mean, he hasn't even indicated that he wants to end the war. He wants to keep what he has in Ukraine and get more of Ukraine, but he doesn't necessarily want to stop. But when Trump says, well, I want to make a deal with Putin and maybe the United States can get access to Russian minerals as well, I mean, that kind of changes the equation. So, the whole thing has been in a kind of a state of stasis for a while. So maybe this will, shake things up and send it on a different trajectory.
Yeah, it really stood out to me when you were talking about this, both of you in our last editorial meeting. And Rick, you said we were so close to Russia finally capitulating, and then you have the latest.
Not that. I mean, this is the. I mean, they're not losing on the battlefield, but they are. It's starting to hurt their economy.
Yeah.
Some analysts think that this is the year when Russia is going to start to run short of the war material. I mean, so it's almost like this was. And by the way, Ukraine's exhausted too. So there are just vulnerabilities on both sides.
And one quick point, too, the larger question here, which was put to Trump this week, is whether this is a precursor on the Russia side to loosening tariffs. He says no for now, but that's the real underlying Russia's economy, the problem with Russia's economy right now, sort of a limit on Russian oil and gas, sanctions on all sorts of manufactured goods that are taking a real toll. And if that starts to get on the table, then you can sort of see Putin being very interested in this one way or another, whether he wants to give up or not.
Everything comes back to tariffs.
It all comes back to
That's going to be on Ben's note cards again next week, I'll bet you.
It all comes back to the money, which is why you want to follow Yahoo Finance for your political news as well. All right, we are out of time. That's it for this episode of Capital Gains. Thank you to Chairman Brady, also Rick and Ben for being here. And thank you for joining us. Like and subscribe to Capital Gains wherever you get your podcasts. We'll see you next time.